why venture capital funding could hurt your startup. A lot of startups' first goal is to raise money, especially from venture capital firms and other institutional investors, so that they have enough cash to fund their startup and to be able to scale and grow. While this makes perfect sense, it is important to consider the risks associated with accepting venture capital funding. And one of the big concerns has to do with growth. To explain this issue, you have to understand how the venture capital firm investment fund model works. What venture capital firms do is that they invest in a lot of startups, and their goal is for a small percentage of these startups to be incredibly successful. And those few that are incredibly successful funnel the entire fund's success. Now, keep in mind, venture capital firms, especially venture capital funds, right? They have other investors whose money they manage and they invest. So they have to answer to those investors. So their sole goal is to make a return because they owe a fiduciary duty to their investors, right? To make them money. So the bottom line is, what happens a lot of time is, and not a lot of time, almost always, right? Venture capital firms will push startups to grow as quickly as possible because that growth is critical for them to be successful. Now, the problem is that some startups may not want this, right? You may not want to be a $1 billion company, and there's nothing wrong with that. If you sell your company and you exit at $50 million, you're tremendously successful, right? But that will most likely not fit a venture capital firm's goals. So the bottom line is, if your goal is to accept venture capital funding, and if you're willing to accept venture capital funding, just be sure you understand what you're getting into. And there's nothing wrong with trying to be a $1 billion company or even bigger, right? If that is your goal, of course you need VC money because you need a lot of money to grow that fast. But you have to really, really evaluate your own goals and ambitions, because it is perfectly fine. And there's very many successful startup stories where the founders have exited at 20 million, 50 million, 200 million valuations, which will probably not satisfy most VC firms, but were tremendous success stories for the founders. And also keep in mind, just working with many, many startups, certain ideas, certain concepts, certain startups, right? It may be hard for them to scale to those huge levels. So my advice to every founder is, when you're evaluating raising funds and raising money, whether you need it, whether you're going to try to bootstrap, consider your goals. What are your goals? What kind of business are you in? And what do you think the ceiling on that is? And you should really evaluate this before you accept any money or before you try to raise money from any venture capital firm. And again, I'm not saying this to badmouth venture capital firms. They are critically important to the startup ecosystem. But as a founder, you need to really think about whether that is something that will benefit you and whether you want to scale and grow to that size. I hope you found this video helpful.